Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for December 1st, 2024. I titled this, Will Bouncing NVDA Pull Markets Higher? Again, my email address is marketmripro@gmail.com. Thanks for joining. Market MRI Pro is a new tool that I'm developing with my partner, Praveen. It really was sort of a gift he gave me after being watching me for some time, and we're now trying to expand it, improve the charting platform, and then we'll push it out as a commercial offering. This is for educational purposes only. Any recommendations are in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. And just assume whenever I or anybody else talks about a stock that they're going to buy or sell, they may already own it. They may be thinking of selling it or shorting it. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. Most of you already are part of the group, but I have started a group called Top Down Trader. Share this with your friends. It's a free group where I will be posting these videos, letting you know when they go up. I'll have special offers. I'll be doing some live webinars and other programs to help jumpstart your trading. All right. So I like to start with the timely model. This is the weekly model. You can see it's highlighted in purple. There's a lot on this chart, but basically you got the spiders, the Qs, the diamonds, and the Russell. And we're just going to talk about the buy-sell line, which you can see is green. So on the weekly, which is my dominant signal, we are long. What is concerning is that the 3-month or 13-week new high, new low is at 95.6 on the spider, 96.49 on the Russell. Those are both areas that you start to look for at least a pullback, maybe some sideways move, not necessarily a major correction, but it's a time to be concerned, and both of these are at extended highs. The Qs are at 80%. They've been lagging, and the diamonds are at 91%, so they're getting ripe as well. If I look at the daily charts, you could see the big difference here is even the Qs are now in a long signal. So that's an improvement. If I go into the market briefing, let's just take a look at the market breadth view. A lot of data points being loaded here, as you'll see when it pops up. All right. So first thing, NYSE on the left, NASDAQ on the right, and you don't have to have any dots, lines, or arrows to see how far price is from that 200-day moving average. This is by far, I'd have to measure this one, but it really looks a lot like it's getting extended. Just from the moving averages, no surprise. Over here, this is stocks above their moving averages. 17 is green, 50 is 200, white is the 50. It's all defined over here. And we're getting to points where it starts to come down. Over on the NASDAQ, you can see a similar pattern, although the stocks over the 200 there is lagging. Down here, we have the new high, new lows, advanced decliners, up, down volume, and then the Bangos, Hindenburgs, Phoenixes, and Eurekas. Another Bango in the day on Friday, just showing a lot of exuberance to the upside. On the NASDAQ, also everything's green over here, no new signal. So, this market can certainly go higher. Extended markets do go higher, but all these signals here are really pointing to a market that probably needs a pause to refresh. Now, it just turns out that the first week of Christmas is often a choppy week. We do have a bunch of news coming in, so maybe that's what we'll see, not necessarily a big pullback. If I look at the performance view, second to load it this morning. Okay, on the performance view, I like to rank it by one-day close. And you can see here the diamonds were the leaders on the day. Actually, we flip that around. It's not diamonds. It was the Qs, spiders, diamonds, and Russell. Lagging was volatility. What bothered me was the Russell was in the bottom of the range, while the others were in the top of their range. If you look at from a 5-day perspective, turn this sort off, you could see that the Russell led on the last 5 days, which since it was a 4-day week, would include the prior Friday. On a 1-day move, discretionary, tech, industrials were in the lead. And if we flip it, the laggards were real estate, utilities, but really only real estate was to the downside. We look at over 5 days, you'll see discretionary, real estate, and staples. It's an interesting week, and maybe it's an everything up week except for energy, when both discretionary and staples are in the top 3 on performance. Over here, you can see the new high, new lows. They're not massive numbers, but they're very positive. I like to think that markets go up on the back of new highs, not on the back of new lows. So that's good to see. Now, over here are, many of you are familiar with the bucket analysis that I do as part of my weekend updates. And then Sagar, with the Q-Edge tool, takes the S&P 1500 and can tell you how many sectors are up, industries are up, stocks advanced, and then in the buckets, how many are above the midline. I thought that was brilliant. It is brilliant. So what I've done is I've duplicated that here. You can see majority of sectors were up, majority of industry groups were up, a little bit over half of stocks were up. All right, so it was kind of a little bit better than middle day. But now I can look at the same results, which are pretty consistent on this trading day for the NYSE and the NASDAQ. And then the buckets view traditionally look just at the S&P 1500, which is down here. But what we've done is we've built it for each of the major indices. Now there's 3 time frames. The thick gray bar is where were we a week ago, and you could see it was much higher to the left. So I would say that the strength shifted to the right. And then where were we a day ago, which is the skinnier gray bar. And you could see that the big differences that I see looking at this is that we don't have much above or below on any of the indices. A little bit peaking up here on the NASDAQ. Mostly stuck a little bit above the middle. So not a big signal here whatsoever. And then I have ratio charts, which allow me to look at performance versus the spider. Bitcoin's not a sector, but I like to look at that. The strength is there. The rest of these are all S&P 500 sectors. And you can see strength in communications, discretionary, industrial, financials, and that staples is trying to move up, as is utilities, maybe real estate. Tech is weak, been weak. And healthcare is the weakest, along with materials. Now, I think the real power of this tool and what is really new in my trading world is this page. Now, this page is very much set up for my style, and that's a good thing for me, but it might not be good for you. So one of the things that we're doing is we're building in a lot of additional indicators and opportunities for your own customization. In fact, as we bring this to market, we're going to make it possible for folks to actually have their own things programmed in as well. But that's to follow, and I don't want to get too far down the line on that. So for those that follow me will recognize the chart, high-low jump. We want it less than 100, less than 95 optimally. It's always going to be less than 100. When it's above 95, it's extended to the upside. When it's below minus 95, it's extended to the downside. See, it's minus 100, bottom. All right, then we have the bongo, which is a trending indicator that I developed with some of my peers years ago after Ian asked us to. The top is the weekly, the bottom is the daily. In the pricing window, we have a 200-day simple, a 50 in white simple, and a 17-day simple. These are all defined on the left-hand edge. Here is traditional volume. And then we have the dots. So those that have my product in programs like Wealth Charts are used to 4 dots. They're used to, and this would be from, not the top 2 things. We got gap, volume, breakout, and momentum. The yellow line is the squeeze. The 3 green dots after that are coming out of a squeeze. Then you have the PSAR, which is not mine. It's just, I think it's a nice reversal tool. And then the blue is a green candle low, and the red is a red candle high. What's additional here is this red to green line is taking the EMS signal, which is really a trading system. And you're a short when it's a red line. You have a long signal when it's a green dot. And then there's another momentum indicator that I do not have, or change in momentum indicator called the CPR, which is not in some of the other platforms. Below this, and I've got to flip the order, this is OBV versus its moving average, and then this is relative strength versus the spider versus the moving average. I don't really care what the absolute numbers are. I might care about what the chart looks like, looking at divergences and things. But what I do care is it above or below? Green is above, red is below, and the numbers represent the days since a cross. Over here, we took a number of indexes, weeklies, and then for me, I have the JAS list. And the JAS list would be stocks in the NASDAQ, NYSE, and Amex, and then filtered for $1 and 100,000 shares. One could see here that gives 3,367 trading instruments. Across the top here, if I hit that check mark, the pretty graphics go away, and I can check off the stocks that I want to add to my watch list. Last price change, percent change, number of up dots. So DOYU is up at the top with 4 dots. So we should see 4 dots when the price changes to 1144, which is DOYU. One of the things that we are working on is going to be the speed. Try a different one. Okay. That's JVA. Let's go to DOYU. Here you go. So here you can see a wild stock that pulled back to support and broke out the 200. You could see it had more than average volume. I mean, I don't know anything about this stock. I don't like the pattern. It's where it broke down here. I suspect sometime around early September there was some earnings. Let's see. Nope, must have been news, but you can look at the basic earnings pattern there. But I want just to point out here, you got 4 up dots. And in this case, you could go up to 5 or 6, but you got the CPR, volume, breakout momentum, the PSAR reversal, just crossing on the OBV and positive on the relative strength. So you can look through these by number of dots up. Bongo age, telling me, is it red or blue and how long ago did it switch? I use a short-term momentum tool for ranking. It's RM2. That's the short-term one. IESC made it to the top. Probably too pricey for me and most of you, but what a beautiful run. And this was a $100 stock at the beginning of the year. Then I have an intermediate and a long-term ranking, relative volume, what stocks have a lot of volume. Now, you think about Friday was a shortened day, so you may not see a lot of stocks with high relative volume. Let's just look here. Silo, that's a cheap stock. I don't even want to look at it. Yeah, you can see how much volume it had. But let's go down to MRO was down on the session on massive volume. So it just helps me find stocks intraday that have a lot of volume. And these numbers here for OBV, relative strength daily and weekly show up here as well. So there's a lot of information here, but that's not where the power is. If I'm a bottoms up guy, I can drop this arrow down and I could go, all right, I want to have volume greater than 500,000 shares. That brings the 3367 down to 1484. That's bad for, well, all right, still going to price greater than 5. Brings it down even more. So on Friday, a shortened day, there are only 1,251 stocks that were greater than $5 and 500,000 shares. And then one of my favorite signals is the K-force 2 days up. And that requires a momentum signal 2 days in a row. And I actually like all three of these. Let's look at MNSO. I believe this company is like an online retailer. Obviously a big pullback here, but we're in a bit of an uptrend. Let's look at it on a weekly chart. So short-term uptrend, taking out the 50 on the weekly as well as the daily. Look at the last 2 days with the EMS signal, and then volume breakouts and momentum, a PSAR reversal, a flip in the OBV and the relative strength. The bongos are good. It's not extended. And if I'm interested in their fundamentals, and we're going to build out a whole suite here, 1129, they had 30 cents, 7% beat, not a surprise, but their revenue was up 16%. So sometimes, like NVIDIA, you can beat and go down. Here's a scenario where they missed and they went up. And I suspect a lot of that had to do with whisper numbers or expectations. Maybe this isn't as bad as they thought. Veristem is a biotech. Now, this is an interesting time for biotech because we have the American Society of Hematology, the blood doctors, starting in a week, followed by the San Antonio Breast Conference, and then in mid-January, the JP Morgan Healthcare Conference. A lot of biotechs will run up into that, and last year there were a bunch of acquisitions at the JP Morgan in the radioligand therapy space. I don't normally buy things below the 200 because if you think about natural gas as an example, things usually often fail there. But something's going on here. This is a pretty big rush. Good volume, got the EMS, again, multiple dots coming out of the squeeze with positive OBV and relative strength and not extended. And you can see on the weekly chart that this thing has been sick for a long time. But even on the weekly chart, and I apologize, I can't move this. That's one of the things that we're changing. It's been moving up for a number of weeks. So Veristem looks interesting here. AEO is well below 200 as well, but a big reversal. Look at the change in just the whole tenor of the stock from the reds to the blues and the greens, and positive on the relative strength in the OBV. So interesting that they're pretty much all laggards, but a lot of the things that are strong are getting extended. Now, another one of the systems that I like in here is, I call it my CPR reversal. So let's look at that one. And this requires specific patterns on or changes on the weekly chart, and then a new buy on the daily chart. So let's look at the multi-time frame CPR. 1251 becomes only 97. And one of them that I liked a lot was UBS. Let me just show you. Now, this is beautiful uptrend. It's loosey-goosey because it's an ADR. Broke out above the 17. You've got EMS and a CPR, breakout and momentum, positive down here and not extending. SoundHound has a lot of people that like this stock. It's a low-cost AI stock that's pretty volatile. Is this the end of the volatility, and is it a new, fresh breakout? Let's see what it looks like on the weekly chart. And you can see it'll have to get through this area. Tried this before. I don't remember if they make money. Let's see. They do not make money, and they have very modest amounts of revenue. I think it's a meme stock. Doesn't mean it can't go up and become a great story. AAOI is a stock that's on a massive move. Now notice the high-low jump is at 100%. So I have a hard time buying something this extended. But if you go back here, you can say, yeah, this is an obvious day here. But look the day before. The day before you had an EMS and a CPR, volume breakout momentum. You could have bought it with a breakout of the 17 or early in the next session and be up quite a bit. There's a double since that point. probably too far gone for me. Just looking through these to see, I looked at a lot of stocks over this weekend. This is an energy services company, and I kind of like the pullback and sort of a breakout from the flag from 20 to 26. So, maybe you get 4 or 5 points out of this stock right here. Again, EMS, CPR. Interestingly, the OBV has not turned positive yet. The relative strength is positive. So that's just another way of narrowing the list. And the last one is, let's just look, again, stocks requiring a specific pattern on the weekly as on the daily. And let's look at the weekly bullish reversals. Now, there's not been a lot of downtrends. 124, now put the $5 that have reversed. This has been a strong market, but let's just see if there's anything that looks interesting up here. Let's throw the volume kicker on. 52. Voyager is Voyager Therapeutics looks to me like it's a biotech, and you'll see it's a cheap one below the 200, junky looking chart. Here's my Veristem again. So you have to have had both if I look at the weekly, you have to have, you can't really see it, but you have to have a reversal on the weekly, and then on the daily, you got the fresh buy signals coming in. So this is another one of the ones I looked at. United Healthcare. Big uptrend. It's kind of loosey and junky here. They won a lawsuit, or Humana, one of these won a lawsuit against the feds on their stars rating, and that's lifted the rest of the group. So all of this is bottoms up. It's taking a big list and it's applying specific signals to see which ones are doing well. Let's stop that. Kill my filters. 3367. Now let's look at top down. Let's rank everything by short-term momentum. So top down means I'm long the market based upon my signals. Where is the strength? Well, you can see the leading group is communications, followed by defensive, which is staples and healthcare. And this would be one-day short-term momentum. If you look at the industry groups, these are the leading industry groups, and notice semiconductors are there. That's kind of surprising because semiconductors have been out of favor. Now, if I click on communication services, I'm going to bring up the leaders in communication services and all the stocks in its sector. And no surprise, Netflix broke out of a flag. Now, Netflix really does well historically with January earnings, and that's one that I'm going to be talking about and looking at a lot as we get closer to those earnings. Meta, widely held, and a bit of a pullback, but sitting just below the 50, and a break of this would be very interesting. So I could look at the stocks in communications, or turn that off. I could look at just the leading group. So let's just take brokers, independent power producers, semiconductors, and let's just rank and look at these and see what comes to the top. ASML is a beaten down semi that's starting to move. Again, it's a beaten down semi way down in its pattern, but notice these have turned green and it took out the 17. Again, not my favorite pattern because it's so beaten up. CLAK, KLAK, similar pattern. NVMI, Nova Limited, below the moving averages. Ambarilla, fresh breakout. Now, what do you think the high jump was over here on this bar? It was 100. And this is very typical. Now it's come down to 91. Will it go back up? Will it drop further, go sideways? I don't know, but that's a pretty strong move on massive volume. I wonder if there were some earnings surprises here. And you had a gigantic earnings surprise, massive increase in earnings, and a big surprise on earnings and revenue. That's the kind of thing that can propel a stock significantly. AAOI, another high-flying technology stock. Again, 100% on the high jump, so it's run a little bit. So what I've done now is I pulled the top 3 industry groups, and I'm looking at the leadership in their groups. NRG is a independent power producer. Nice move here. It's one of the ones that I like this weekend. Now I started with my comments about NVIDIA, so let's take a look at NVIDIA. NVIDIA is sitting right on the 50. It actually moved up off of a doji on Wednesday. Not much volume, but we're not going to hold that against it because it was a holiday. It had a CPR signal, and everything else is still negative. I think this is something you watch because it's sitting on support. If it starts to move, all this stuff will improve, and this could be important in the overall market. Would I buy it on Monday at this area? No, but I'd be watching it, and if it starts to show a nice move, I might decide it's time to get back into NVIDIA. So I want to show you a little bit of how I look at the market from a top down and a bottoms up. Comments, questions, send them to us at the top down trader group. We're still in the development phase. Things will get faster, and we haven't activated a drop down menu for other indicators and drawing tools. I don't yet have the ability of scaling this. All this is coming, and that's why we've taken a while to put it out. The other thing is, if you watched it this far, send me a note. Are you interested in a live meeting in June? And would you prefer California or Florida? Have a great week. Hope you like the tool. Hope you like our videos. And we'll see you on the other side.